I need you to stop looking at the red candles on the chart. I need you to stop listening to the analysts telling you that the dollar has been saved. And I definitely need you to stop panicking because the price of silver dropped to $83. Because while you were staring at a paper distraction in New York, the real move, the checkmate move, is happening right now in Beijing. The United States thinks it won the battle yesterday by smashing the price. But China is preparing to win the war by flipping the board over. It is Tuesday, February 3rd, 2026. And the most important news of the day is not the price of gold. It is an article that was just published in Qiushi, the flagship theory journal of the Chinese Communist Party. Now, I know what you're thinking. Asian guy, why do I care about a communist magazine? You care because this is not a blog post? This is the voice of President Xi Jinping himself? And he didn't write this article to talk about philosophy. He wrote it to give a marching order to the People's Bank of China. He wrote it to declare the start of the financial military parade. In this article, President Xi explicitly states that China must build a powerful currency to challenge the dominance of the US dollar. He calls for the acceleration of the yuan's internationalization, but he goes further. He links the strength of the currency directly to the nation's financial security. He is telling the world in no uncertain terms that the era of the dollar hegemony is over, and the era of the gold-backed yuan is about to begin. This is the signal we have been waiting for. This is the green light for the nuclear option. You have to understand the timing. Why publish this now? Why release this order less than 24 hours after the US banks smashed the price of gold and silver? Because Beijing knows the US is vulnerable. They know that paper smash was a desperate attempt to defend the dollar, so they are countering it with the one weapon the US cannot defend against: truth. The United States defends its currency with debt, derivatives, and aircraft carriers. China is preparing to defend its currency with hard assets. Intelligence reports are flooding in that this Qiushi article is the precursor to a massive announcement. We are hearing rumors, credible rumors, from deep within the Shanghai financial district that China is preparing to officially update its gold reserve numbers. For years, the official number has been a joke. They report adding maybe 27 tons a month. But we track the flow. We track the imports through Hong Kong. We track the mine production. The real number is likely 10 times higher. They have been hiding thousands of tons of gold in off-balance sheet accounts under the State Administration of Foreign Exchange and the military. They have been accumulating in the shadows, waiting for the perfect moment to reveal their hand. And that moment is now. Imagine the scene. The US markets are in chaos. The debt is 38 trillion. The confidence is shaken. And suddenly, China holds a press conference. They don't roll out tanks. They don't launch missiles. They simply update a spreadsheet. They announce that instead of 2,000 tons of gold, they actually hold 30,000 tons. They announce that the yuan is now backed by more physical metal than any currency in history. What happens to the US dollar in that second? It collapses. What happens to the price of gold? It teleports. It goes from 4,900 to 10,000 overnight. Because the market suddenly realizes that the price was being suppressed by a bankrupt entity, the US, while the value was being hoarded by a solvent one, China. This is the financial military parade. Just like when they roll the hypersonic missiles down Tiananmen Square to show the world their power, this gold reveal is designed to show the world their financial sovereignty. It is a warning shot to Washington. You can smash the paper price all you want. We have the physical metal, checkmate. And the craziest part, the US accidentally helped them do it. By smashing the price yesterday by creating that fake crash to $83, the US banks made gold and silver cheaper for China to buy. They put the strategic assets on a clearance sale right before the reveal. China is laughing all the way to the vault. They are taking every ounce of silver that flows out of London and New York, and they are using it to build the foundation of this new powerful currency. All right, so do not be distracted by the noise. The paper smash was a smoke grenade. The real army is moving in the background, and while the US is playing checkers with derivatives, China is playing Go with bullion. But there is a specific mechanism that is driving this flow. There's a mathematical reason why the Western vaults are bleeding dry right now. We need to talk about David Jensen. We need to talk about the 34-day arbitrage gap that is acting like a vacuum cleaner for global silver. But you don't need to be a geopolitical mastermind to understand why the West is losing. You just need a calculator, and you need to look at the one data point that has the bullion banks sweating through their expensive suits. We need to talk about David Jensen. David is one of the few analysts who actually tracks the plumbing of the silver market, the physical movement of bars rather than the paper movement of contracts. And he just dropped a statistic that should be flashing red on every trading desk in London and New York. He has identified a vacuum. What? A vacuum so powerful that it is sucking the physical inventory out of the West at a rate that is mathematically unsustainable. We are talking about the Shanghai arbitrage. Right now, as we speak, The price of silver on the Shanghai Gold Exchange is trading at a massive premium over the price in London and New York. The paper smash in the US drove the price down to the mid-80s. But in China, the price didn't blink. The premium, the extra amount Chinese buyers are willing to pay just to get their hands on the metal, is currently hovering around 29%. That is roughly $22.98 per ounce above the Western spot price. But wait, it gets worse for the COMEX because to get that metal into the Chinese market, you have to account for the value-added tax, the VAT, or when you add the 13% VAT to the premium, the replacement cost. The actual price commanded by silver inside the Chinese border is staggering. It is trading at $36.22 above the Western price. $36. That is the gap. That is the spread. Now, let's look at the logistics. How much does it cost to rent a secure armored plane, insure the cargo, and fly a ton of silver from London to Shanghai? Roughly $2 per ounce, maybe $2.50 if you want express delivery. So do the math. Profit equals the spread minus the shipping cost. $36 minus $2. That leaves a $34 risk-free profit for every single ounce of silver you move from west to east. $34. Do you understand what this means? In the financial world, this is called free money. It is an infinite money glitch. If you are a bullion bank or a trading house or a miner, why on earth would you sell your silver in New York for $86? Why would you sell it in London? You wouldn't. You would load it onto a pallet. You would put it on a plane, you would fly it to Shanghai, and you would sell it for $120. You make an instant 40% return on a flight that takes 12 hours. There is no better trade in the world right now. And this is the vacuum. This is the giant sucking sound that Ross Perot warned us about, but for precious metals. Water flows downhill. Capital flows to the highest return, and silver flows to the highest bidder. Right now, China is the highest bidder by a mile. They are effectively paying a $34 bounty on every ounce of silver in the world. They are saying, bring it to us. Drain your vaults, empty your ETFs, we will pay you. And the Western banks, they are taking the bait. They are arbitrageurs. They don't care about long-term security. They care about quarterly bonuses. So they are selling, they are shipping, they are draining the vaults in London, they are draining the vaults in New York. They are draining the COMEX registered inventory. They are draining the SLV ETF. All of it is flowing east. And here's the kicker. This is not a temporary situation. This is not a 2-week anomaly. This arbitrage gap has been open for months, and it is widening. Because as the physical supply in the West gets tighter, the premium in China gets bigger, and as the premium gets bigger, the incentive to ship gets stronger. And as more metal ships, the Western supply gets even tighter. It is a feedback loop. It is a death spiral for Western inventory. David Jensen estimates that at the current rate of outflow, the London vaults will be effectively empty of available silver within 18 to 24 months. The COMEX registered silver, the stuff that is actually available for delivery, is already at multi-year lows. We are talking about less than 50 million ounces in the registered category. That sounds like a lot until you realize that a single industrial user or a single determined buyer could wipe that out in a week. In China? China is sitting on the other side, with infinite demand and infinite currency. They can print yuan forever. They can buy every ounce that hits the market. And they are doing exactly that. So when you saw the price crash to $83 yesterday, you have to understand what really happened. The Western banks naked shorted the paper market. They created fake supply on the COMEX to push the price down. But they didn't create any real silver. They just created contracts. Meanwhile, China saw that price drop and said, thank you, discount accepted. And they bought more physical. The paper price went down, but the physical flow went up. The divergence is now undeniable. The paper market and the physical market are no longer connected. They are two separate games. And the paper game is losing credibility by the day. This is why the Western central banks are terrified right now, because they built their entire monetary system on a lie. They told the world that paper contracts are as good as physical metal. They told the world that you don't need to hold gold and silver. You can just hold a certificate, a derivative, an ETF share. And for decades, people believed them. But now the curtain is being pulled back. Now the world is waking up. And the scramble for physical is accelerating. Let me give you the numbers that should make every investor pay attention. The global silver market is approximately 1 billion ounces per year in total supply. That includes mining, recycling, everything. Of that 1 billion ounces, roughly 600 million ounces go to industrial demand. Solar panels, electronics, batteries, medical equipment. That demand is not flexible. You cannot make a solar panel without silver. You cannot substitute it. So that 600 million ounces is locked in. That leaves 400 million ounces for investment demand and monetary demand. Now, if China decides they want to accumulate, let's say, 200 million ounces a year to back their currency, That is half of the available supply. And we are already seeing signs they are buying at that rate or higher. Add in India, which traditionally buys 100 to 150 million ounces a year for jewelry and investment. Add in the Middle East, which is now diversifying out of dollars into hard assets. Add in the European investors who are watching their banks collapse. Add in the American stackers who are buying every dip. You are looking at a market where demand is exceeding supply by a significant margin, and the gap is being filled by Western vaults. They are liquidating their strategic reserves to keep the price suppressed and to keep the physical market from completely breaking. But here's the problem. Vaults are not infinite. You can print unlimited paper contracts, but you cannot print silver bars. And once the vaults are empty, the game is over. This is what happened in the 1960s with the London gold pool. The Western central banks tried to suppress the price of gold by selling their reserves into the market. They formed a cartel. They coordinated sales. They kept the price at $35 per ounce. And it worked for a while, until it didn't. In 1968, the pool collapsed. The vaults were empty. The demand was too strong, and gold broke free. The price went from $35 to over $800 within a decade, a 20x move. And that was with far less global demand than we have today. We are seeing the same setup right now with silver. The Western banks are running the same playbook. Suppress the price, sell the reserves, hope that demand goes away. But demand is not going away. Demand is accelerating, and the vaults are nearly empty. When the break comes, and it will come, the price will not go up 10% or 20%. It will gap. It will jump in a single day from $85 to $150, maybe higher, because there will be no physical metal available at the suppressed price. The shorts will scramble to cover. The industrial users will panic buy. The investors will FOMO in, and the paper market will collapse into irrelevance. And China knows this. This is why they are moving now. This is why Xi Jinping published that article. This is why the rumors of the gold reserve announcement are swirling. They are preparing to be on the right side of history when the break happens. Now let's talk about what this means for the yuan and the dollar. The US dollar is the global reserve currency, but why? Not because of gold. The US went off the gold standard in 1971. The dollar is the reserve currency because of three things: military power, the petrodollar system, and inertia. The military power is still there, but it is increasingly expensive and unpopular. The petrodollar system is crumbling. Saudi Arabia is now accepting yuan for oil. Russia is selling oil in rubles and yuan. The BRICS nations are building alternative payment systems. The inertia is breaking, so what is left to support the dollar? Debt. The US has $38 trillion in national debt. The interest payments alone are now over $1 trillion per year. That is more than the defense budget. The US is borrowing money to pay interest on money it already borrowed. That is a debt spiral. That is a Ponzi scheme. And everyone knows it. China, on the other hand, has been preparing for this moment, and they have been accumulating gold for 20 years. They have been building the Belt and Road Initiative to create yuan-denominated trade routes. They have been signing currency swap agreements with dozens of countries. They have been launching the digital yuan. And now they are preparing to reveal the treasure chest. If China announces that they hold 30,000 tons of gold, the yuan instantly becomes the most credible currency in the world. It becomes the currency backed by real wealth, not by debt and derivatives. And every central bank, every sovereign wealth fund, every pension fund in the world will have to recalculate their reserves. They will ask themselves, do we want to hold dollars backed by nothing but debt and military threats? Or do we want to hold yuan backed by 30,000 tons of gold in the world's largest manufacturing economy? The answer is obvious, and the shift will be rapid. Capital will flow out of dollars and into yuan. US Treasury bonds will sell off. Interest rates will spike. Inflation will explode. And the Federal Reserve will be faced with an impossible choice: defend the dollar by raising rates and crashing the economy, or let the dollar collapse and hyperinflate. Either way, the American standard of living is about to take a massive hit. And this is not a conspiracy theory. This is not fear-mongering. This is basic mathematics. You cannot run a $2 trillion deficit forever. You cannot print $10 trillion in a pandemic and expect no consequences. You cannot weaponize the dollar and expect the rest of the world to keep using it. The bill is coming due, and China is holding the invoice. So what do? What is the average person supposed to do with this information? Because let me be clear, this is not just a story for gold bugs and preppers. This is a story that will affect every single person watching this video. When the currency system shifts, when the reserve currency changes, everything changes. Your savings, your purchasing power, your job, your retirement, everything is on the table. Here is what you need to understand. We are not talking about if this happens. We are talking about when. The trajectory is set. The dominoes are falling. The only question is timing. And based on what we are seeing right now, based on the Xi Jinping article, based on the arbitrage vacuum, based on the vault drainage, we are closer to the end than the beginning. So here is my advice. First, get physical. I don't care if you buy gold, silver, platinum, palladium. Buy something real, something you can hold, something that cannot be printed, hacked, or confiscated with a keystroke. The paper market is a casino. The ETFs are IOUs. The futures contracts are bets. Physical metal is money. It has been money for 5,000 years. And it will be money when the dollar is a footnote in history books. Second, get out of debt. Debt is a claim on your future productivity. And in a currency crisis, debt becomes a noose. If you owe money in a collapsing currency, you might think that is good because you pay it back with worthless paper. But that only works if you still have income. If the economy crashes, if your job disappears, if the bank freezes your accounts, that debt will destroy you. Pay it off now while you still can. Third, diversify your assets. Do not keep everything in one country, one currency, one system. Spread it out. Own some real estate. Own some metals. Own some foreign currency. Own some Bitcoin if you understand it. The goal is resilience. The goal is to survive the transition. Because there will be a transition, and it will be chaotic. Fourth, educate yourself. Do not rely on mainstream media to tell you the truth. They are owned by the same banks that are shorting silver. They are paid to keep you calm, to keep you invested in the system, to keep you from asking questions. Read independent analysts. Follow the data. Think for yourself. And fifth, prepare mentally. This is going to be hard. When the currency system breaks, people will panic. There will be bank runs. There will be shortages. There will be social unrest. The government will blame Russia, China, hackers, whoever. They will not take responsibility. They will impose capital controls. They will freeze accounts. They will possibly even confiscate assets. History shows us this is what governments do when they are desperate. So you need to be ready. Not paranoid, but prepared. Have some cash on hand. Have some food stored. Have a plan for your family. Have a network of people you trust. Because when the system breaks, the people who are prepared will be the ones who survive and thrive. Now, I know some of you are thinking, this sounds extreme. Now, this sounds like doomsday talk. But let me ask you this. 5 years ago, did you think the government would lock you in your house for a virus? Did you think they would print $10 trillion in 2 years? Did you think inflation would hit 9%? Did you think Russia would be cut off from SWIFT? Did you think Saudi Arabia would sell oil in yuan? All of these things happened. All of these things were called conspiracy theories before they happened. And now they are facts. So when I tell you that the dollar is going to lose reserve currency status, when I tell you that gold is going to $10,000, when I tell you that silver is going to $300, I am not making it up. I am reading the signals. I am following the money. The money is flowing east. China is not playing games. They are not bluffing. They have been preparing for this moment for 2 decades. And they are about to pull the trigger. The gold announcement is coming. The yuan, backed by gold, is coming. The collapse of the petrodollar is coming. And when it comes, 99% of people will be caught completely off guard. But you don't have to be one of them. You are watching this video. You are seeking information. You are thinking critically. You have a chance to get ahead of this. You have a chance to protect yourself and your family. So do not wait. Do not think you have more time. Do not assume the government will save you. They won't. They can't. They are the ones who created this mess, and they will sacrifice you to save themselves. The checkmate is coming. The question is, will you be holding dollars or gold when it happens? This is the financial military parade. This is the end of the dollar era. This is the beginning of the hard money revolution. And if you are still with me, if this information resonated with you, I need you to do 3 things right now. First, smash that subscribe button. This channel is dedicated to bringing you the truth about what is really happening in the financial world. We do not sugarcoat. We do not follow the mainstream narrative. We follow the money. And we will continue to expose these stories as they unfold. Subscribe now so you do not miss the next update, because things are moving fast. Second, hit the like button and share this video. The algorithms suppress content like this. YouTube does not want you to see this. The banks do not want you to see this. But the truth needs to get out. So share this with your friends, your family, your coworkers. Post it on social media. Send it in group chats. The more people who wake up, the harder it will be for them to pull off this heist. And third, drop a comment below. Tell me what you think. Are you buying gold and silver? Are you worried about the dollar? Do you think China is about to make their move? I read every comment, and I want to hear from you. This is a community of people who see what is coming, and we need to stick together. The storm is here. The checkmate is in motion. And the only question left is, are you ready? Subscribe, share, prepare. I will see you in the next one. Stay safe, stay smart, and stack hard.